How's it going, guys? This is Andy. Welcome back to another episode on the Andy Kandola Show. So we are officially in September. In this video, I'm going to go ahead and share with you guys the top 5 stocks that I'm basically buying during this month. Now here's the thing, guys. My portfolio took a beating this week. Just in the last day, I took a loss of $1,643. This is pretty nuts. This is actually the biggest loss that I've actually taken in this portfolio. And hey, it does sting a little bit, even though the strategy is still long term, still focused on income. It just hurts to see losing that type of money. Now, the market did go down a lot in this last week, and just in this last day here, the Dow Jones did go down 800 points, and then the Nasdaq went down around 600 points. We'll see what happens for the rest of the week here, but I do believe that the market is doing a correction at this point, and basically the tech sector is the one that's really taking a bigger beating here. The tech sector took a beating of right around 6% just in one single day. So we'll go ahead and keep an eye on the market, guys. Now, if you are new to this channel, I do focus on dividend-based stocks. This portfolio, which I call the bucket list portfolio, is purely all dividend-based stocks. Now here's the thing, guys. I am gonna be going pretty aggressively in investing in these 5 stocks that I'm gonna go ahead and share with you guys here in this video. But just to show you guys where this portfolio is currently at in this last day here, I did take a big beating of $1,643, and that was a reduction of 2.76% of my overall gains in this portfolio. So the current portfolio value is at $57,968. Now, just in this last week here, the portfolio is still down at $262.80, or I did lose 0.46% in the last month. The portfolio is still up, so that's a good sign. It's up 5%, or $2,615. In the last quarter, the portfolio is up 9%, or $3,982. And then all time, guys, the portfolio is up 20%, or $6,468. Now, there's a couple trades that I'm making in this portfolio today because the market is still down, and I believe right now the market is still low for today. So I am actually executing 7 trades. So I'll go ahead and share that with you guys as well. But now let's go ahead and jump into the 5 stocks that I'm basically going to be loading up on during the month of September. And one of these stocks is actually a new stock that I'm adding into my portfolio. Now currently I have 52 stocks, but I'm adding a 53rd stock, and I'll go ahead and share with you guys the reasoning when we get to that stock as well. But you know what? Let's go ahead and start with that stock. That's gonna be Walt Disney. Now with Disney, this is actually a communication company, and I do have a buy order for this for $200 in my portfolio. Now here's the thing, guys. With Disney, why I added this back into my portfolio, even though Disney did cut their dividends, and I actually got rid of it when they cut their dividends, but I realized that this ecosystem is just way too strong. Now Disney does also own Disney Plus. Plus they own the ESPN channels, they have theme parks, they are basically diversified through multiple channels and multiple sources of income. But here's my thing around this. The ecosystem is just way too strong with Disney. I'm looking at a 20-year time frame. This is a stock that I kind of went back and forth with, deciding if I actually want to invest this in my portfolio and go ahead and add it back into my portfolio. But because I'm looking to actually grow this portfolio for the next 20 years, I just don't want to miss out on the stock any longer. And if we just look at the overall stock here, they did go ahead and take a hit when we did have the pandemic. But since the pandemic, I mean, this stock has consistently been climbing. But at this point, guys, I just don't want to FOMO later, and I'm just going to go ahead and dollar cost average myself and go ahead and add the stock in the portfolio. Now, Disney was paying a dividend yield of 1.32%. Their PE ratio is on the opposite side because they did lose a lot of income, but I do see that climbing back up, and this company does have a market cap of over $240 billion. Now another thing with Disney is Mulan is basically one of Disney's characters, and they just actually released that Mulan is going to be streaming on Disney Plus. So things like this, I see Disney and with all their characters being able to go ahead and attract people to their platform. They have way too many Disney Disney characters. So again, this is a stock that just has way too strong of an ecosystem to actually be missing out on a stock like this. Now guys, let's go ahead and jump into the next stock here. The next stock that is actually going to be on the list is going to be in the communication sector as well, and that is going to be Atm T. Now Atm T is a stock that I've been consistently loading up on. My current value in Atm T is $2,210. I have earned about $31 in dividends, but overall I'm still down on the stock. This is basically one of the only stocks within my holdings that I'm actually still down on. But it's not that much. It's only 1% or $14. But here's my thing with this company. They pay too high of a dividend. I mean, right now, their dividend yield is 7%. And if we just look at their overall trend, this stock has basically been trading sideways if we look at the last 6 months. They've been trading right around that $30 range. But the way I'm looking at this stock is that high dividend yield for a safer communication stock, that's a necessity, and that's a business model that's basically needed. And with their PE ratio trading at right around 18 and with a 7% dividend yield, I am long on the stock. And to me, even if the stock goes up to $40 and they are giving me out a dividend yield of 7%, I'm happy with that. I mean, as long as they don't cut their dividends, but this company does have a good strong record of their dividends. Because if we go over to Simply Safe Dividends, which is basically a site that lets you go ahead and gives you safety scores on different dividends, as well as it's actually got some really useful information as far as dividend history and that sort of thing. Now with Atm T, their dividend safety scores are 65, so that means it is a safe dividend. But here's the really nice thing that I like about this is that they've been consistently paying their dividends for the last 36 years, and this company has been growing their dividends for the last 36 years. Even though the dividend growth is not that high, it's at 2% on average, that's still okay because they're considered a dividend aristocrat and a company that's been paying out their dividends for 36 years. You can tell that they are committed to their dividends. So guys, this is basically the second stock that I'm going to keep loading up on during this month. Now next, let's go ahead and jump into the next stock. The next stock that I'm buying right now is going to be Walmart. Now Walmart is a stock that I recently also added in my portfolio as well. This was in the last couple months, but here is another stock that has a very strong ecosystem. Now with Walmart, I believe this stock is gonna be the biggest competitor for Amazon. Now Walmart Plus is something that they just recently announced, and Walmart Plus is gonna be a subscription model that's gonna be focused on an e-commerce retail game. Basically, they are going against Amazon head on. It's going to be a subscription where you pay $98 a year, and basically with this they are going to have a similar subscription model to Amazon where you can go ahead and get 2 days delivery on all your products. Now with Walmart, they have retail locations as well, so I believe this is going to be an extremely positive way for Walmart to go ahead and get into the game and get into the retail e-commerce game. Now guys, if anybody can give competition to Amazon, that's going to be Walmart and Walmart Plus. So we'll go ahead and see what happens, but I'm very long on the stock and very bullish on the stock because I do believe that this has a lot of upside potential. And Walmart, being one of the largest retail stores in the world and in the US, they have very strong fundamentals. Now here's the thing, with Walmart, I have a current value of $765, or I am up $50.97, and I have a positive return of 9.28%. But if we go ahead and look at the stock as well, this is another stock that's paying out a dividend. And if we just look at the last 6 months, another stock that's been consistently just growing as well. They are actually up about 30% in the last 6 months. And if we look at the last year, Walmart really did not take much of a hit during the pandemic, and they're up 28.82%. Plus, they do pay out a dividend yield of 1.48%, and their PE ratio is 22. And if we go ahead and go over to Simply Safe Dividends, Walmart does have a safety score of a 78, so this stock and their dividend seems pretty safe at this point. Plus, here's another nice thing, another stock that's also actually going to be considered a dividend king soon here. Basically, a dividend king is a stock that's been paying out a dividend consistently and growing a dividend for 50 years, and they are at 47 years. So Walmart is, you can tell, committed to growing their dividends and committed to paying their dividends, and they've been consistently paying their dividends for the last 47 years. So to me, another stock in my portfolio that I do believe is an extremely safe stock stock long term and a great ecosystem. Now, talking about an ecosystem, next stock on this list is going to be a stock that's basically the king of when it comes down to an ecosystem. And that stock is going to be our favorite. And basically, I believe everybody at this point probably knows about this stock, and that is going to be Apple. Now, Apple has the strongest ecosystem hands down. Literally, once you buy one piece of device from Apple or one of their products, you tend to actually multiply and get multiple products from them. Now, personally, in my case, I started with an Apple iPhone. At this point, I have the Apple Watch, I have the Apple iPad, I have the Apple MacBook, and I have the MacBook Pro. So you can tell with this company, they really just suck you into their ecosystem. And I just cannot see this world without Apple at this point. I believe for the next 10 to 20 years, the stock is just going to consistently grow at an aggressive pace. And this company does pay out a dividend as well. But if we look at Apple in my current portfolio, this is actually one of my biggest holdings. My current value in the stock is $7,463. I am up 78% in the stock, or $2,133. Now, because of this current correction in the market, a lot of these technology stocks are starting to go down, but that's okay. We're in it for the long term. I see the stock still growing for the long term, and I do believe this correction is pretty healthy for the market, even though I hate losing money. But now, just looking at Apple, let's go ahead and kind of look at their performance for the last 6 months and the last year. But if we just look at the current stock price just in the last day, the stock is actually down 8%, or $10.52. Apple did recently have a stock split, so that's why the shares are at that price at this point. But if we look at the last 6 months, I mean, you can tell the stock is up 67%. But in regards to Apple, they're paying a dividend yield of 0.65%. Their PE ratio is 36.43, which is kind of an average PE ratio in regards to the tech sector. And the other thing with the stock, guys, is this is basically the largest market cap stock within the whole stock market. So they are at 2.1 trillion as far as the market cap for Apple goes. So this is the fourth stock that I'm actually loading up on during this month. Now, the fifth stock and the final stock here is going to be still in the technology sector. Because the technology sector is taking a hit, this is actually a good time to go ahead and invest in this sector. And this stock is going to be Nvidia. Now, Nvidia is a stock that's basically a semiconductor. They make chips for different types of industries. Basically, they make chips for the gaming industry, and they have a platform called the GeForce platform, where a lot of the top games are actually on, including Minecraft, Call of Duty, the other one I believe, and I'm trying to think of it, is Fortnite. So they do have some of the largest games that are actually on their platform. Additionally, Nvidia does make a lot of money from data center chips as well, and they're also in the AI technology world. So basically, in the Tesla vehicles, Tesla does have a contract with Nvidia, so the chips are from Nvidia that are used in the Tesla vehicles, and I believe they also have contracts with Mercedes and Volkswagen. So this company is climbing, and I do believe that they are gonna stay the industry leader when it comes down to the semiconductor industry. Now, currently in my portfolio, I do have $1,689 in value in this stock. I have a $271 gain, or 55% overall gain within this portfolio. I am buying $200 in the stock as of today as well, because hey, the stock's been hit, so why not buy? And it's a good time to buy right now. Additionally, if we go ahead and look at the charts for Nvidia in the last 6 months is up 115%. I mean, this is awesome when you go ahead and look at the stock price growth of this company. We are seeing a little bit of a correction here, but that's okay. Now, in regards to the last month, Nvidia is up 30%, and then if we just look at the last 5 years, they're up 1,640%. Now, Nvidia does not pay that high of a dividend, which is kind of the only downfall to this. They do pay a dividend of 0.12, and they have a PE ratio of 94.16. But guys, these are basically going to be the 5 stocks that I'm basically loading up on during this month. Now, here's my 7 trades that I'm actually making today. I am going ahead and investing $600 into the stock market today. I'm buying $200 on Nvidia. I'm buying $200 in Disney, and then the rest of the $200 that I'm investing is basically going to be allocated towards the target allocation that I have in my portfolio. So as far as all the different stocks here, $120 of that $200 is going to go towards Apple, and then from there the rest of the denominations are going to be going into Union Pacific, Lind, Costco, and waste management. But these are basically going to be all my trades that I'm making in this portfolio right now. So hopefully you guys enjoyed this video. These are going to be all the stocks that I'm investing in. If you have any questions around any of these stocks, or if you want to go ahead and let me know what stock you're investing in, I would be curious, and I'm sure it helps the community out, because the more people that share more about the stock market, hey, it helps all of us out at the end of the day. And guys, if you are new to this channel, don't forget to subscribe to the channel down below. And if you like videos like this, make sure to hit that like button, as it really does help, because YouTube seems to love that like button, and it helps promote the videos and get this video in front of more people. But thank you guys for watching. If you are interested in a couple free stocks, go ahead and check out my description. You can actually get 3 free stocks, one with Robinhood, a second free stock with Webull, and a third free stock with Public. If you are interested in a dividend-based portfolio, check out the description for M1 Finance. M1 Finance basically has a limited time offer right now where they are actually giving you $20 when you go ahead and set up an account with them. I'm an affiliate with them, so it does help the channel out, and I do get $20 as well. But guys, thank you for watching. I'll see you guys at the next one.